Good afternoon, everyone. It's 3:30 here in the UK on Tuesday, the 26th of January. I'm looking, as always, at the start of these at VectorVest US running in real time an hour into the day, and as you can see, the advances, well, slightly ahead of the declines. A fairly flat day ahead of all the news that I'm sure that you're fully aware of. So all the measures of the trend on VectorVest are up in this market from short term to long term, but the short term trend has taken its foot off the petrol a little bit, and VectorVest advocates caution when buying stocks at this time. I've entitled this video The Good and the Bad, and that's because yesterday afternoon in our VectorVest UK Q&A webcast that I do every Monday afternoon, I talked about two stocks. I then, after our webcast, went into a marketing meeting with a lady who runs our investment shows, which are hopefully going to occur if we get a fair wind here in the UK behind us through the vaccine, etc., in the middle of the year. When I came out of that meeting about an hour later, I found that the two stocks in question were no longer on my market maker. So let's have a look at them. And the first stock that I've spoken about a lot is Apps, and I've had many good trades in Apps, but the last trade in Apps I bought there at that little horizontal line as it broke up through that. The fairly simple reason: there was a trend line, that support, and there was old highs here, plus there was a fib level there as well for those people that are fib analysts after a three-wave pullback. So yesterday afternoon, when I went into that meeting, the marketing meeting, I still had Apps. But when I came out, it wasn't there, and that's because the profit was in the bank, thank God, because I'd put in an order last week sometime to get out of it if it in fact got to the 1.618 extension of the pullback, and I'd put an order in, a limit order, to get out at about a tick or two underneath 70, and that's exactly what happened yesterday afternoon. So the money was in the bank. Unfortunately, in the other stock that I talked about in the presentation, the money was not in the bank. The money was taken out of my bank, because this is Square. Now, Square is a share that I've had some great runs in this market over the last, well, since April. I traded it here, got out of it just before Christmas, and liked the look of it yesterday afternoon. Many people at our webcast pointed out that that's a double top, and they could easily be right. It pulled back, and on Friday found support at that 78% retracement, and I simply bought it without thinking a great deal when it opened above that high, and then I put a stop loss down underneath that low, went into the marketing meeting, and when I came back, the stop had been hit, and I'd in fact been stopped out of the trade. So those two trades, I'm reasonably happy with the process in both trades. Made a reasonable amount of money in Apps, lost a little bit of money in Square. So that's what trading's all about. It's nothing to do with me, and we'll move to the next one without worrying too much. So many people are saying that big sell-off yesterday afternoon was just stop running ahead of the big news in tech that's coming in tomorrow and next week. We shall see, but that's a very ominous looking outside bar on Square. So I'm glad I'm out of it for the moment, and it's not reacting that well today either. Time will tell. So in the US, if I can go now to the viewers, Apps is gone, and Square was in there for less than an hour, so those have gone, but I'm still holding the rest of them, and I'm glad that this FLGT seems to be moving. It was very close to being stopped out a day or two ago. AMD, I'm very positive about, and Apple clearly is on a new high. It hasn't broken a new high. So the rest of these I'm reasonably happy. Well in the money in PLTR, well in the money in Peloton. So I'm not that happy, not that unhappy with that. And as you can see, now at 25 to 4, the SPX is up a whole 8.7 ticks. So so a really good trade in apps, and stopped out quite quick on SQ. Quite honestly, I like those trades where you get stopped out quickly. There's nothing more miserable than a trade that does absolutely nothing for weeks on end and then stops you out. So at least the pain came quickly. In the UK, well, in the UK we had a red light, which means that the short-term trend is down, and down with some conviction. And as you can see, there's a black star in that red light, which means that the short-term trend is down, and it's moving down with momentum. So a down-up situation, and as you can see, the buy-sell ratio fell by nearly 50% on yesterday. So that's a weakening of the UK market. I see the FTSE's up 30 or 40 points the last time I looked. Clearly a big headwind here is the strength that's coming into cable, and I see that the cable's 137 against the dollar. A week or two ago it was 127 and its low was 117, so clearly that adds a great deal of headwinds to some of the big ticker stocks that make their money in dollars, and they report in pounds. As the pound gets stronger, then they report less pounds, so that is a weight on the market as well. I haven't done anything here, but I need to be very careful about some positions in the UK. They're sitting closer on their stop losses, namely plus 500, but only the short-term measure of the trend in the UK is down at the moment, so let's just keep our eye on it. I still remain quite positive about this market, but I think it's going to trundle sideways until this big news comes out over the next couple of days. As you know, we've got Apple, we've got Facebook and Microsoft news coming. Next week we've got Google and Amazon, so a big 10 days worth of news. So good as she goes. Trade well.